Come on in, sit back and relax. You're listening to the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And this is our June news roundup. We've got a wide range of stories for you, including Orion, Flourish, Nitrogen, LPL, Altruist, Trade PMR, Future Vault, and a whole lot more. Of course, VastAdvisor Map and WealthTech Integration Score. And we've got a special guest host for this episode of the news. I won't tell you who that is yet. You'll be surprised. But speaking of the AdvisorTech Map, if you're in an RIA, your tech stack didn't evolve by design, mostly evolved by accident. New custodians, new portfolio management tools, new must-have apps layered on year after year. And now your leadership is wondering why your advisors aren't using the tools you paid for and why operations feel harder, not easier. At Ezra Group, we don't sell software. We just help wealth management firms objectively assess their tech ecosystems and make smart, defensible decisions about where to invest and where to stop wasting money. You need to go to ezragroup.com. And you should check out our 90-day tech stack reboot, which gives you clarity without committing to a years-long transformation project. So if you want your firm to grow exponentially instead of slowing down, you need to run, not walk to our website, ezragroup.com, and click the giant, beautiful purple Contact Us button on the homepage and book a strategy call. As a group, we just make tech stacks better. Housekeeping tasks. Please subscribe to the show wherever you listen to podcasts and check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. All right, now let's kick this thing off. All right. We are here with the news, and I'm excited to introduce my host for the news. Rejoining us is Jeremi Karnell. Hey, buddy.
Hey, how you doing?
I'm doing fantastic. Where are you in the world today?
Austin, Texas.
That is excellent. It's a great place to be.
Mourning a little bit after last night's loss to the Knicks.
I understand. Yeah, that happens.
Yeah.
That happens to the best of us. So I always tell people, like, no matter what sport you like, no matter what team you like, no matter how successful they are, probably 99% of the time you're going to be disappointed.
100%.
Right? No matter what
I
it
was
is.
for New York, so I was happy with the outcome. My son was not.
There you go. Cool. And well, we're going to kick off the news with a story about you, Jeremi Karnell. VastAdvisor appoints Jeremi Karnell as Chief Product Officer. Congratulations.
Thank you. I'm employed, finally.
Yeah. Finally employed. Was it a long interview process? Did you have to go to like a lot of referrals?
I know a guy.
You know a guy there. You have an in.
I know a guy. Yeah, it looks like me. Yeah, no, it's been great to finally rejoin. The band is back together again, right? So Ian Karnell,
my band back together, man.
Identical twin brother, Eli Gassert, our Chief Technology Officer. We're all back kicking it again with VastAdvisor, and it could not be happier. So, and
for anyone who doesn't know, just give the 30-second elevator pitch. This is not a VastAdvisor interview, but just give us the elevator pitch.
Not a problem. VastAdvisor is a growth operating engine purpose-built for the wealth management space. We're really going after the lead brokers and the incredible cost to wealth firms related to renting their organic growth versus owning it on a platform like VastAdvisor.
And if you weren't here, I would just read this press release. Karnell will lead product strategy, platform architecture, and the ongoing development of VastAdvisor's AI-native growth infrastructure, including its core intelligence layer, VastAdvisor IQ. He joins as the company accelerates its enterprise expansion across RIAs, broker-dealers, and wealth platforms following its debut at Future-Proof Citywide in March.
Yes, indeed.
And I can tell this was written by AI because it's got an M dash in the middle of that sentence.
100%. M dash is the tell, right?
And no matter how many times I say don't put it, it still puts it in. Like something's built into the core of every LLM that it has to use M dash.
I don't even know how to actually execute an M dash on my keyboard if I want to. I have no idea where it is.
Word will put it in automatically.
Yeah.
If you put an M dash into a space after the M dash, it'll fill it out. Yeah. Anyway, Cool. So that's great. Congratulations. You were formerly head of data at InvestNet, and before that, CEO of Trulytics, an advisor intelligence platform that InvestNet acquired in 2022. So
Yes,
moving on with your career.
it's been a journey.
You are here not as your VastAdvisor role, but you're here as a host for the news, and we're going to talk about other companies and other interesting stuff, and not VastAdvisor. So,
Yes.
first story is about Orion, and Orion and Flourish expand integration to bring cash into a connected advisor experience. So, these two firms announced an expanded integration that helps advisors bring cash more fully into the wealth management experience. So, the enhanced integration allows advisors to initiate Flourish Cash invitations from within Orion, pre-fill client information to streamline account opening, and incorporate eligible cash accounts into Orion's reporting and planning workflows. So I think this is kind of cool because cash management kind of flies under the radar. It's not very flashy. It doesn't get a lot of press, but it's a huge benefit for advisors that they use it. It's a nice revenue stream, and having it built in to your platform where you say invite and boom really reduces a lot of friction.
Agreed. I think held away cash and lending were really how banks kept their high net worth clients. That was their stickiness. And pulling that into sort of advisor relationships sort of flips that retention dynamic. So I think it's smart.
And Flourish also, I know, has integrations with Salesforce and a lot of other companies where you can also do that same thing where you can click just invite, and it invites the client right through your application with one click. Which greatly reduces friction, makes it much easier for the clients to sign up, and then getting more assets on your platform is hugely beneficial. And Flourish Cash has, if you go to ezragroup.com and look at the integration scores under cash management, Flourish has the number one score with an 8.47 because they have a tremendous number of integrations. I think, let me see how many integrations they have. I'm guessing at least 30. Yep. I think 30 integrations. So tremendous amount of integrations with all the key applications. So once linked, client cash balances can be incorporated into Orion's unified reporting and planning experience, supporting more holistic financial conversations. That includes improved visibility for cash flow planning, distributions, windfalls, and excess cash management, as well as a more complete foundation for long-term planning discussions. By bringing cash into a consolidated client view, the integration helps advisors better understand a meaningful component of household balance sheets that has traditionally been less visible within the advisor relationship. I agree, and it's been something that's been really bothering me for many years is the lack of holistic planning. Yeah. We say the word holistic all the time, but we're not. Everyone's really focused in the investable assets and very little else.
Well, again, I think that it goes to the proof points when I was at InvestNet, just regarding our insights around held away cash and just how it was literally one of the most utilized for wealth advisors. I think everyone's running after that category. So, yeah.
Yeah, it's really tremendous. I think there's some new things coming down the pike for Flourish. So they've got Flourish Cash, and they launched Flourish Annuities. So you can buy annuities through the platform. And they bought Sora Finance, which is a very cool product for lending, having advisors be able to do lending to their clients. And that's to me, that's holistic, where you have to look at both assets and liabilities.
Yeah, that's exactly right. Agree.
I mean, did you see any of that in Trulytics when you were doing, that kind of data provided a lot of value to how advisors are running their businesses?
Yeah, I agree with that. I don't think at that time I'm having to dust off some cobwebs here. Yeah, I don't think we were actually looking at the value of wealth firms through that lens back in the day. So I agree. I think it'd be a critical component today in an RIA or an IAR's valuation. I agree.
So everyone knows Orion. They've got $6 trillion in assets under administration and $185 billion of wealth management platform assets, 8 million accounts. Everyone knows that. Flourish, they have high yield cash accounts and home lending. They help RIAs unearth new assets, defend against asset loss, and better compete with wirehouses and banks. So you can find them at flourish.com and, of course, at orion.com. Okay. Next story. Nitrogen launches tool for advisors that capture wealth transfer beneficiaries. So Nitrogen, an advisor technology provider, on Tuesday launched a new AI-driven tool designed to help advisors build relationships with clients' beneficiaries before wealth transfers, along with other upgrades to its tax product and its agentic AI workflow manager. Nitrogen said the new wealth transfer tool, Legacy Center, generates a visual representation of a client's estate, including accounts, trusts, and insurance policies and beneficiaries with projected dollar amounts. Then this is this June, so I guess this article must have come out in May. They're gonna launch another tool called Legacy Key, an advisor-branded message sent to each beneficiary through Nitrogen that provides a point of contact and guidance when a wealth transfer occurs. So, what do you think of that, Jeremy?
I think there's a stat. I forget where it's referenced. Like 98% of advisories say that wealth transfer matters, but really only 40% have a plan for that. In fact, in many respects, a lot of conversations that I know we've been having on our end has been like with this huge wealth transfer that's about to happen right now, that because it's going to be a wholesale new generation, digital first generation and AI first generation that have been brought up on vastly different tool sets, the likelihood of existing advisors retaining the next gen is very small. It's going to be a very uphill battle for them. So I think this is really selling into that gap, right? And I think it reframes retention really around sort of a relationship graph problem versus a portfolio problem. So
what do you mean by a relationship graph problem?
Meaning like they need to understand who they need to get to be able to retain these assets. I think that's what this story is really telling.
Yeah, I think it's an interesting new product for Nitrogen. If you look at their products, they really focus on things that engage with clients. So yeah, they turn risk tolerance into an engaging tool, a marketing and tool that would never was before. They launched their research center, which is analytics and competing with Morningstar Direct and Morningstar, other Morningstar products. They have the tax center, which is competing with Holistaplan, and they've got an income center, which is does model risk, time horizons, and probabilities for success. Now their legacy center. So I see these as a pretty interesting collection of tools that advisors can use to engage their clients better.
Yeah, no doubt. And I think the business model for this, it's bundled into Nitrogen Complete. Am I reading that correctly? $419 bucks. Is that right? Yeah. Or it's sold as an add-on as well. So,
yeah, they have a bunch of different options. Yeah. I think they can sell everything. They can sell everything separately, or you can bundle them in different options. If you look at their pricing, they've got each one as a separate option if you want, and then they've got bundles. So they've got Nitrogen Complete, Nitrogen Elite, and make your own bundle. Which is pretty cool. I would do that. I would make my own bundle if I could. Yeah. All right. So any other thing here? Nitrogen said Legacy Center is its fifth advisor product since the firm was founded in 2011, back when they were Riskalyze, and was prompted to create. They were prompted to create it by their own clients. In a survey that of their own clients said 98% believe generational wealth transfer will be important to business, but only 40% plan to address it. Natixis had some global wealth transfer more to 84 trillion. So I think they'll definitely do well with that. It's sort of an area that a lot of advisors maybe not be thinking of when it comes to how they look at their tech stack. Yeah. And they also have some new AI tools. They have their agentic AI engine called Nucleus, includes context-aware conversations across client tabs. Everyone's now got an AI engine in their technology, so it's not. I was not surprised by that. Okay, so nitrogenwealth.com for them. Okay, let's talk about LPL. LPL shares tumble after Rich Steinmeier told analysts of key AI headwinds, namely that any use case has to work foremost for 30 plus advisors. So LPL Financial absorbed his greatest grilling yet about AI and AI again during an investor call, and the stock. This is back in this is last month. The stock lost 5% when they were talking through this. They're very forthright about the AI headwinds for broker dealers and how it's going to be impacting them. Theoretically, it should be straightforward to affect change, especially since we don't have to contend with the constraints of operating a bank and all that entails. But on the other hand, we only exist to serve the over 30,000 advisors and over 1,000 institutions that have trusted us with the business in the 8 million American families we serve. So they say that could be a big issue for them. How do you feel about this, Jeremy?
I think the central one of the central tensions of enterprise AI, I think I saw this at Investment as well, is that traditionally scale is your moat and your anchor, right? And a 30,000 plus advisor base means really you can't ship on the bleeding edge, and you ship what's safe, right? What's supportable and compliant for everyone. And I think that's probably the right posture for these large enterprises, but the market definitely is punishing them for a lack of any type of vision of a moonshot. So I think that's what this is.
Yeah, it's tough when you're a company of that size,
Yeah.
right? I mean, you're talking
Yeah.
about they can't really move that fast, even if they wanted to.
Right.
Right? It's very difficult. I mean, the stock price is under 300. So back in May, it was 340, and since May 1st, it's been down, bounced a little bit. I'd be buying it. I'd be a buyer of LPL stock just looking purely on technical analysis. I think it's
Yeah.
and they're fundamentally they seem to have a great business model. And if the stock is, I'm looking at it as a sale, right? Stock's on sale under 300, could be a good buy for me. Not that I'm giving any investment advice. I'm not an advisor, but it could be useful. And they're still growing. I'm just waiting for the next shoe to drop. Like they just absorbed Commonwealth, and that seemed to go pretty smoothly. I think they lost a reasonable number of advisors. I'm not sure what the exact percentage was, but I know Raymond James got a bunch of those. And other ones, but that was to be expected. But that was a huge change for the industry, and definitely didn't help a lot of vendors. When vendors consolidate, when broker deals consolidate, it's no good for vendors. You remember that?
Oh yeah, 1,000%.
When you get churned. So 2024 MIT study by Entrepreneur Magazine found that automation was more economical in just 23% of roles that rely heavily on visual tasks. On the other 77% of cases, keeping human workers was still the more cost-effective option. So how do you feel about advisors being replaced by AI, Jeremy?
I don't think it's going to happen wholesale. I think there are going to be portions of advisors that manage certain segments that it will happen in. But I do think we need to. I don't think it's an all or nothing category, right? And I do think there are going to be firms that lean on AI based advice, and there are going to be firms that lean on human based advice, and they're going to be great sort of examples of hybrids of that. And they're just going to serve different segments efficiently in their own way, right? I think the mass segment, the younger segment is going to obviously be leaning more towards AI advice. I think the high net worth is not wholly going to rely on human advice either. I think they're going to really want to see that whoever they are working with from a relationship perspective is armed with the same tools they have at their fingertips. And so it's going to be an interesting 3 to 4 years ahead of us.
Yes, I have a different feeling on that. I really think that AI is going to take a bite out of some advisors that don't expect it, just because it's not the same as robo advice, right? AI can be smart, AI can be empathetic, AI can pass the CFP. Right? So you could go to ChatGPT right now and say, give me a financial plan. It'll do it. It won't be great, won't be as good as an advisor can do, but most people don't know that, right? So how much will that siphon off? How many people say, why am I paying 100 basis points or 80 basis points when I can get most of this through AI? So I think it's going to push advisors to really deliver holistic advice, whether it's through the Orion Flourish combination, where they're doing cash management and lending and others, or more estate planning, or budgeting, whatever it might be, more alternative investments. Some ways they need to differentiate themselves from what AI can do.
Yeah, but I think that's going to be just consistent against any professional services dynamic, right? I mean, hell, even with engineering, like right now, AI allows any one of us to vibe code software. Is that and that software specific to us is fine, but that software being able to be monetized at scale, no. They're very different things. That's where engineering really can shine, and understanding what that full stack looks like, being able to wire everything together. Financial advisors are going to be the same thing, right? So yes, AI is going to be able to take you so far with advice, but if you really want that full service comprehensive approach like you're talking about, it is still going to require that advisor, but it's going to be that advisor having to be very well equipped with some great tooling that's emerging today.
So my good friend Michael Keatsis was down in Boca at Wealth Management Edge talking to another friend of mine, Jason Pierre, and they were talking about AI and speaking to it. So Michael was saying that with new tech promises more speed, he also believes that advisors may go deeper because they have more time to do so. Rather than taking the time savings from AI, instead of adding more clients, so what if the future is not that we have 40% more clients, but we have the exact same number of clients, but the advice is 40% better?
That's what Kitchis said?
That's what Michael said, yes.
Michael
Kitchis said that, yes.
Yeah, I mean, all things being equal, if the market doesn't change, then he's probably right. But again, we're seeing the first generation of wealth advisors retire and or die, and they're not getting replaced anytime soon. So someone's going to have to pick up those clients. And obviously, some are going to peel off with AI, but I don't see a world ahead of us where books of business for advisors don't expand pretty dramatically. They're going to just have to do more work with less. Right?
I think it's going to be, you're going to have advisors into different categories. Some advisors are going to expand their scale, how many clients they can manage, because AI makes it easier for them. And some will do what Michael said. They'll keep the same number of clients, but do more for them, hopefully gather more market share. And other advisors will go out of business because they can't keep pace.
That's exactly right. That's right.
And I think AI is a double-edged sword. Some investors may do what they did with robo-advisors, put their beta assets with the AI tools and keep their alpha with advisors. We've seen that happen. Some may use AI as a launch pad. It may be like a lead gen. You know a lot about lead gen, so they may be starting with AI, getting the hang of it, then go, I need more than this, and I want to find an advisor.
That's right.
Right. That's right. And there was I think Samantha Russell was talking about how advisors can make themselves more visible to AI, because AI is becoming lead gen for advisors.
Yeah. I mean, that's what VastAdvisor is leveraging a great deal, and being able to dramatically reduce the cost of organic growth, leveraging that tool set. So I mean, it's definitely the wave of the future.
Because we've been getting here at Ezra Group, we've been getting more and more leads from AI.
Yeah.
Like if you look at our website, we're seeing an increase. Like it's still way below what Google sends us, but we're seeing a rise of both Claude and ChatGPT inbound referrals.
Got it. So I'm sorry. So when you say you're getting them from AI, you're saying that this is the impact of your content and thought leadership being covered in some of the frontier large language models. So when people are leveraging that and asking it certain things, they're bringing your name up, and that's how they're finding you.
Yes.
Is that you mean?
Yeah. So they're asking. I mean, I don't know the exact question they're asking, what prompt they're putting in, but they're saying something like, "Who should we talk to about advisor technology?" And this comes up Ezra Group, and they click on that link inside ChatGPT, and it takes them to our website, and we track that.
Yeah, I mean that is quickly replacing the entire concept of search engine optimization. This sort of like large language LLM optimization. Definitely.
I'm going to send you in a chat another story I want to talk about. But
did Jason Pierre say anything in that conversation that you were having with Michael?
Oh, nothing useful. No, I'm just joking.
Poor Jason.
Poor Jason. Let me go back to that. Wait a second. Where is that? Let me go back. Yeah, Jason said something, but again, I'm just reading the story on wealthmanagement.com. They were just focusing on what Michael said. Unfortunately, they didn't really mention what Jason said. Poor Jason. I mean, come on, buddy. Well, here we go.
up on what Michael said about at Advise AI last year. I think he said it was just like a fancy calculator or something like that.
Maybe. Wait, here, Jason said, I'm trying to get some advisors to serve 1,000 to 2,000 clients. And I said, respectfully, you just described my nightmare. Pierre said, either I want to provide so little value to 2,000 people that I'm a commodity that's easily replaced, or I've completely burnt myself out. Because how do you fit that? The math doesn't work.
Yeah.
So that was Jason's comment there. They were eating hot wings and having a conversation. So that's the new thing in these conferences. People eat hot wings and talk about tech.
Love it. Well, we should do that for the next news.
Okay, you want to eat hot wings while we're?
I think it'd be great.
Well, we could do that. That seems to be a fun thing for people to do. They want to cough while they're trying to talk. Maybe we should eat something else.
Okay.
Something that isn't making us cough. Okay. All right. So let's do one more story here. Future Vault. All right. So Future Vault launches MCP and AI orchestration layer. I really love these stories. I think we're going to be flooded with these soon. Because here at Ezra Group, we're building MCP servers as well for our clients that want to be able to chat about their data. Like we built an MCP server for Black Diamond. So our RIA clients can just say, show me my top 50 clients or whatever they want to ask them. Right. So now Future Vault can do that. You can they announced the launch of its MCP and AI orchestration layer, turning insights into automated next best actions. I thought you'd like this story. Giving firms a secure way to connect tools like Claude and ChatGPT directly to their document infrastructure without breaking governance, permission, or data privacy controls. Jeremy, go.
I think MCPs are slowly and surely, maybe not slowly, quickly replacing APIs as a primary sort of data integration layer. I think this is table stakes as well. Like, I think for example, on VastAdvisor side, we are replacing a piece of our stack because they don't have an MCP server and we need our agents to be able to talk to it. And we're looking at all of the different software that we license today through that lens. Like, can our agent swarms interact with your tooling? If not, we'll replace you.
Yeah, exactly. So built on the Model Context Protocol, an open standard for secure, context-aware data access, Future Vault MCP enables AI systems to search, read, and reason over enterprise data using natural language, connecting directly to documents across client, advisor, and enterprise vaults. MCP is becoming the new API and the standard connection point between a firm's data infrastructure, AI tools, and agentic orchestration layers. Future Vault MCP is built to participate within this broader ecosystem, enabling firms to connect Future Vault directly to any MCP-compatible AI agent, orchestration harness, or tool. Queries and outputs leverage private LLMs, ensuring document data stays within the firm's own security and privacy framework and is never passed to external models or public infrastructure.
Yeah, like I said, it's table stakes. I think this is very smart for them.
What firms can do with Future Vault MCP? Tax document review, missing and unsigned document detection, estate insurance and retirement gap analysis, client summaries and deliverables, automated next best action. So that's the thing that raised my antenna. So I think everyone's going to be driving for this. Every vendor is going to take whatever data they have and try to say, we can do next best actions, work with us.
Well, I mean, I think I agree with your statement before that we're going to start seeing more and more of these announcements around MCP servers in the stacks themselves. So it is literally going to be where these solutions allow a lot of their clients to be able to operate within their enterprise native AI environments, right? That is what's compliance is approved, and that's the desktop for a lot of these users. And so they don't want them having to log into multiple systems, and the MCP service will just allow anyone on their client end to be able to engage with the document intelligence straight through. Doesn't matter if it's Claude, it doesn't matter if it's Copilot or whatnot. It's just going to be table stakes.
But I think the issue is, yes, everyone's going to want this, but who provides it they're going to be the winners, right? So if you go with the Future Vault next best actions, you're basing it on documents. Right. If you're going with InvestNet's next best actions, it's more transactionally based.
Right. But I think any sophisticated user would probably build an orchestration layer above all of those MCP servers to be able to take and tie all of the NBAs together, right? So it's not one or the other, because they're sort of apples and oranges in how they're sort of approached and calculated. And so, yes, they're next best actions, but what the data is going to be different. How it's calculated is going to be different. And a 1 + 1 = 3 type of situation is probably what we're talking about here. It's just making sure that you don't go down the rabbit hole being like, those are your only next best actions, right? So,
well, I think you can have multiple next best actions. Like the AI note takers are all doing next best actions, right?
Right.
So where do you get it from? And so building it layer on top. So, but everyone wants to be the layer on top. Like the note takers want to be on top. They want to be. They're the gatekeepers for all the data coming into your organization. They want to be able to parse it out to whoever, right? But then then everyone else is getting disintermediated.
I mean, I think that's really where the game is being played right now, right? I think if you look at the 3 tiers of the wealth tech stack, you've got the assistant layer, you've got the control plane, you've got the system of record. That control plane layer, that's exactly what you're talking about. Orchestration, the data ontology models, and the plumbing across the client lifecycle is really where switching costs like data gravity and defensibility lives. That's where the moats live. So the people that control the control plane, or at least that are beginning to acquire that capability and be able to build that capability and really drive that at scale, they're going to win at the end of the day.
It's going to be a crazy fight. I really think. We were already running into clients that are like, "What do I do? Like, which way do I go?" We're spending a lot more time in AI governance, AI architecture, AI orchestration. Like, how do you compare these things? How do you manage these things when every single application is pushing some sort of AI tool or AI function out to you? All right, we are running out of time. I've got a couple more things that I want to talk about. I lost my screen. June news. All right. So we talked about that. Oh, let me hand it to you. I've heard there's some news from a company called VastAdvisor, Jeremi Karnell. Is that true? Can you tease us with some news? It's not on the wire yet, but
not. This is breaking news through you. I actually embargoed this specifically for you, Craig. So you'd be able first.
Okay, so this is going out this week.
It's going to be announced tomorrow, version 1.2 of VastAdvisor. It's a huge release. It involves 3 epics that we sort of pursued like at the same time over the last 3 or 4 months. First and foremost, we've got direct CRM integrations with Salesforce, HubSpot, and Microsoft Dynamics. We've been able to layer in a memory into our AI now. So we've got a memory palace, and every client now will have their own bespoke ontology and knowledge graph that leverages VastAdvisor. And finally, we shipped theme intelligence. So we added in several different real-time signals. The signals mapped to a client's ideal customer profile and their CRM data now produces multiple themes that can be saved, that can drive your campaign moving forward as well. So CRM integration, memory, and dynamic theming. Oh, you're on mute, Craig.
Yeah, it's really great stuff. I keep going on mute because, of course, the landscapers are here right now. All day they're not here. They show up right when we start this recording.
Perfect timing.
I'm trying to keep the sound of the lawnmowers off this podcast. Right. So I think that's great for VastAdvisor. I mean, I think the tools like you guys are really going to be the next generation when it comes to lead gen and marketing. And they advisors are fooling themselves that they think they can do it on their own without a tool like you guys.
Thank you. I appreciate you saying that. Yeah. We the same way.
No, of course you do. I would imagine. So that's vastadvisor.com. All right. So one more story. Let's squeeze in just 2 more stories about custodians.
VastAdvisor.io. Sorry.
Oh, so VastAdvisor.io. Apologize.
AI.
AI? One of these. What domain, top level domain are you using? Just pick one. AI. VastAdvisor.ai. Okay, I'll put it in the show notes.
All right.
All right, let's do some custodian news. Altruist to launch beta of new RIA affiliation option. Altruist is launching a beta of a new model that gives advisors access to the compliance, custody, and operational infrastructure needed to build an independent practice without standing up their own firm from scratch. Sounds familiar. Don't IBDs do this? The firm recently filed with the SEC to create Altruist Advisors, an RIA that's awaiting regulatory approval. Sort of beta program with a small group of advisors, according to Altruist founder and CEO Jason Wenk. The RIA also joined the Protocol for Broker Recruiting, an intra-industry agreement that allows advisors some leeway to take client data with them when they change firms. The whole purpose of Altruist is to make financial advice better, make it more affordable, make it accessible to everyone, Wank said. So this is interesting. What do you think about it, Jeremy?
Yeah, I agree with you. I mean, it looks like they're going to handle a lot. They're taking over, or at least they're going to handle all of the compliance support, including the SEC registration, the ADV filings, the customer relationship summary, and code of ethics, all of that. So it's pretty big news.
Yeah, looking at, so Michael Keats has covered this in his news of the month, and the main takeaway is that most corporate RIAs, that Altruist provides not just tech and the compliance support of a corporate RIA, but again operates first and foremost as the custodian, which is two main implications. First, similar to its software, Altruist doesn't necessarily need to generate a lot of profit from its corporate RIA business for it to make economic sense. It only needs to bring enough client assets onto the platform to make up for the cost of the services it provides. That's always been, I found, why more firms aren't doing what Altruist did. When they started, they were a tech vendor that was reselling custody, right? They were giving the tech away for free they were reselling Drive Wealth, believe it or not, when they first started. Then they switched to Apex. Then they launched their own, right? So they were the model of, hey, just buy the custody, we'll give you the tech for free, which is what most custodians do, but they didn't have their own. Now they're saying, well, hey, be on our RIA, which will give you, for almost whatever. We just want the custody. So custody is so profitable, they can give you almost everything else for free.
Yeah, it looks like they're targeting the mid-market, right? They're attracting breakaway brokers with between 25 million or hundreds of millions in assets. They're not like going after the $1 billion of AUM. So
not yet. They want to. They don't want to. They've been living in under the sub 100 million space for a long time. They're definitely chomping at the bit to grab the $1 billion and up RIAs.
See if this is a path to that.
Yeah, it could very well. So the second takeaway on Keats' site, Altruist could be uniquely appealing as a corporate RIA that doesn't push its advisors to stay with the corporate RIA. So if the advisor converts to their own standalone, Altruist doesn't care, right? Just give us the custody. So it's similar to the way Raymond James would work, right? Yeah. We don't care how you work with us. You can be a W-2, you can be a 1099, you can work on our custody or not. We just give us the assets. We have a million ways to work with us, right? So it seems that's the flexibility is beneficial. So
remember the news that they announced earlier this year around Hazel and just what that did to the market? So it's great to see that they continue to push things.
I think Jason is a really brilliant entrepreneur to blow smoke up his butt, but it's hard. It's hard to get attention in the space, and especially as a custodian, they don't have a lot of assets. You can tell they don't because they won't tell us how much they have. They tell us, oh, we've got 2,000 clients or some number, right? So they throw the number of RIAs they have. They won't tell you what the assets. So that means they don't have a lot, but they still manage to get great news, great coverage, free, right? They get free news coverage, right? That's paid out. That's paid. That they're not paying for that, getting for free. So the fact that you can do that is pretty genius when it comes to marketing.
100%.
Right, so that's going to drive more advisors, right? So that's altruist.com. And even the name Altruist was brilliant when they came up with it, 10 years ago already. I remember when that happened. All right, so altruist.com, you can find that out. And then the next news story is another up and coming custodian, Trade PMR, that was acquired by Robinhood. So Robinhood and Trade PMR, and one of the benefits or the drivers of that acquisition when they first announced it was that they were going to do an RIA referral program from Robinhood's customers. And everyone said that's never going to work. Robinhood's customers are too small. But they finally launched the program. Just came out this month. Robinhood Trade PMR's financial advisor referral network is live with a select group of RIAs and clients. Came during their Synergy conference. They've been working with a group of 17 advisors, and according to Steve Quirk, Chief Brokerage Officer, Robinhood. So they said firms participating brought experience from being part of the country's other referral networks at Schwab and Fidelity. Robinhood's version is available to RIA firms with at least 500 million in assets and a relationship with Trade PMR. For clients, it's available as a phone app that lets them browse advisor firms with a swipe. So Robinhood built its base of 27 million clients, largely with young investors testing the waters of small accounts. So they made the case that those young investors aren't not only wealthier now, but will also be recipients of the Great Wealth Transfer. So the Robinhood Advisor Network targets customers with 250,000 in assets, though operational efficiencies are expected to make lower balance relationships profitable for advisors over time. What say you, Jeremy?
You're going to start seeing more of this. I love this. The digital first, AI first tooling that a lot of the next generation has been using for most of their young adult lives. They're getting into the RIA custody business overnight through steps like this, right? And it's interesting because you look at how wealth enterprises have been dealing with that segment up until lately, because they've been obviously servicing wealth advisors and high net worth individuals, and they're coming up with digital tools that they can push that next generation into. Here is an example of a digital tool that next generation has been using at scale, actually getting into the advisory business. And so it's flipping the script. It's really cool to see.
I'll say. So in the meantime, other players have been getting into the referral game, partly to lure more RIAs to the platform. Goldman Sachs Custody Channel has a program. BNY Pershing and Betterment both have pilot programs. So one thing about Trade PMR, they are not their own custodian. They have a contract with Wells Fargo First Clearing, and they just said Rob Baldwin, the president, founder, CEO of Trade PMR, announced they just extended their contract with Wells Fargo through 2032. So meaning RIAs can choose to stay with Wells or move clients to Robinhood. So I always thought they were going to not re-up that contract. I thought they were going to start pushing clients to Robinhood hard, but I guess they're going to keep the bi-directional or bifurcated process.
Seems so. Yeah.
Cool. So that's tradepmr.com and robinhood.com. So the first thing, so we every month we get a whole bunch of new vendors on the map. And this month, this is June's map. Op Alpha added to the advice engagement category. It's the next best action tool that sits on top of your CRM and surfaces which clients need attention, flags who you should be calling and when. Think of it as a client relationship intelligence layer. So that's advice engagement used to be the cool kids on the block, but that's really fallen by the wayside when it comes to the AI's really blown them out of the water. So I was very surprised to see anybody coming into advice engagement. So Op Alpha, if I can find their website, it's opalpha.io, OPALPHA. Next one, Advice AI, which we created a new category called planning support, which is a new subcategory under financial planning. So Advice AI is built on top of tax status and surfaces tax planning opportunities ranked by complexity with a focus on high net worth clients. So Advice AI, where is that? I can't find the website for that. Sorry about that, folks. Look them up, Advice AI. I don't have the link to the website. All right, WealthStream. So WealthStream has been on the map for a while. They're a marketing tool. We moved them. For some reason, they were in financial planning. Oh, no, was WealthStream financial planning? Oh, so I'm thinking of somebody else. WealthStream moved from financial planning into the new planning support subcategory. So we did that. So why did we do planning support subcategory? I forget why we created that. All right. So in the meanwhile, we have a couple more. We have Hive Tax AI, move from tax into planning support. So this distinction the group is drawing, if it has a calculation engine, it stays in planning or tax. If it's doing analytics and recommendations on top of your existing software, it goes to planning support. Oh, there you go. That's why we did that. So Hive Tax AI is another tool. Do I have the link to that? Man, I'm doing a bad job. Hive Tax AI. I don't have it either. You can look them up. Fiduciary Genius was promoted from planning light into the retirement category. So it's adding enough depth on the retirement projections and spend down modeling to earn that move. That's Fiduciary Genius. You can look them up. And then we've got Ready, Aim, Retire, which I think is a very cool name. It's a new addition going straight into the retirement category. Ready, Aim, Retire, Smarter Retirement Planning Calculator. It's a powerful visual retirement planning platform designed to support advisors who want better client engagement, clearer conversations, more confident decision-making. It's readyaimretire.com. That seems like a pretty cool product. Our next one is FinGale. We added to client meeting support. It's not a note taker. It sits on top of your CRM and handles post-meeting execution work. Man, I just don't know how these guys are going to get any business. It's just there's so much out there. Why would you, I guess you can say, well, we're not a note taker. We do the post-meeting better than note takers, but how many tools are you going to, everyone's got a note taker now. You got to replace something. I don't know how they're going to fit that in, but FinGale thinks they can find a niche. FinGale.com. What do you think, Jeremy?
I agree with you. I think it's interesting to watch how the AI note takers are really beginning to diversify their offerings pretty quickly, because I think they see the writings on the wall. And so I agree with you.
If you want to learn more, go to EzraGroup. Go to WealthTechToday.com, which is our blog. We have a report on AI note takers, which we're calling the AI note taker / Agentic OS, because they've all a bunch of them have expanded to become these new pseudo orchestration engines, tools, platforms that you can get a report for free on WealthTechToday.com. All right, a couple more here. Pocket filing added to investment data analytics. It tracks changes between quarterly 10K filings. So if you've got a client with a concentrated position in a specific company stock, you can monitor material disclosures. It's very niche-y, but there's a use case there. But again, who's going to pay for it? I don't know. Maybe you've got a lot of clients with 10Ks. Pocketfiling.com. Future Vault, they stayed the same. They're still in client file sharing. Finny is staying in prospecting, but we're looking to move it. They have a new product called Hunter. Their drip marketing extension is growing, but we're looking at moving them somewhere else, but not as a standalone marketing platform. That's the problem with a lot of these tools, like VastAdvisor, like Finny. Where do we put you guys? But we're keeping Finny in prospecting for now, even though I think they might be moving into standalone marketing at some point.
A VastAdvisor would be in prospect.
Yeah, definitely. Yeah, we wouldn't want to move that. All right, there you go. Cool. Jeremy, thanks for being here, man.
It was awesome. I really enjoyed this with you. Have a safe Milwaukee.
You too, man. Cheers.
Right. Bye.
Congratulations. You've reached the end of another episode of the Wealth Tech Today podcast. But before you go, please head to our website, EzraGroup.com, and scroll to the bottom of the homepage and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.